Hey everyone, me Kevin here. Holy crap, it happened. Tesla just invested $1.5 billion into Bitcoin. And in this video, I want to tell you not only what this means for the future of Tesla, Bitcoin, Tesla earnings, but I want to tell you some other details about Tesla's intentions. And the easiest way to do all of this is just to jump right into what Tesla said in their latest SEC filing, or filing with the SEC. I'm going to read you off some of these things, explain what they mean, and then I'm going to get into some of the other details you may not have heard about, which is really exciting. Okay, so first, let's read this off. In January 2021, which means this already happened in the past, we updated our investment policy to provide us with more flexibility to further diversify and maximize our returns. That's huge right there. They're saying they want to invest in Bitcoin to maximize their returns on cash. That's amazing. They're not saying we want to store our value. We want to maximize returns. That is oh my gosh, like within the first sentence there, that is such a huge statement for Bitcoin. What validation? Maximize returns on our cash that is not required to maintain adequate operating liquidity. That's just a fancy way of saying, look, we're not going to like screw people out of getting paid salaries or purchase orders from getting paid by investing in Bitcoin. So, you know, we're just going to invest the excess. So if we have 19 bill in cash, we'll put 1.5 bill in Bitcoin and you know, the other 17.5 bill, we'll use that for operating. As part of the policy, which was duly approved by the audit committee of our board of directors, we may continue to invest a portion of such cash into certain alternative reserve assets, including digital assets, gold bullion, gold exchange traded funds, which could be like a gold exchange traded fund is like an IAU, right? To where you don't actually have to hold the gold, you just put it into an ETF. And other assets as specified in the future. Thereafter, so they changed the rules saying we can invest in gold or digital assets, but when they changed the rules to say we can invest in gold or digital assets, they decided to only invest in digital assets. $1.5 billion in Bitcoin under this policy, and may acquire and hold digital assets from time to time or for a long period of time in the future. Moreover, we expect to begin accepting Bitcoin as a form of payment for our products in the near future, subject to applicable laws and initially on a limited basis. And we may or may not liquidate that upon receipt. So they could literally get paid in Bitcoin and just decide to keep that money in Bitcoin, which, I mean, I guess that makes sense. Why transfer it if you don't have to? So, in other words, if they start taking Bitcoin payments, they could literally, over time, just sneak up, like creep up their holdings in Bitcoin by not selling the Bitcoin they get from the cars that they get, which is really interesting because we could keep an eye on Tesla's Bitcoin holdings, and without them actively actually buying Bitcoin, it could creep up. Like their ownership in Bitcoin could creep up substantially. Because otherwise, if somebody wanted to buy a Tesla, they would have to liquidate their Bitcoin and pay cash. So that actually means potentially more holders of Bitcoin, which means less sellers of Bitcoin as more people transact in Bitcoin, which means higher price for Bitcoin. Oh, this is so juicy. This is so juicy. Okay. Thereafter, we invest. Okay, so this is reiterating, but here's what's different. This is really fascinating too. Watch this, okay? So this here says that there it is. Digital assets are considered indefinite lived intangible assets under applicable accounting rules. Accordingly, any decrease in fair market value below a carrying values for such assets at any time subsequent to their acquisition will require us to recognize impairment charges. Okay, I'm going to translate this to English in just a second because this is ridiculous. Whereas we may make no upward revisions for any market price until a sale, okay? As we currently intend to hold these assets long term, these charges may negatively impact our profitability in periods in which such impairment charges occur, even if the overall market value of these assets increases. Okay, in English, basically what they're saying is the price of Bitcoin may go up. And if the price of Bitcoin goes up, we're not gonna reflect any changes in our books on the price of Bitcoin going up. But if the price of Bitcoin goes down, we might actually show a loss by taking an impairment charge, so our profitability goes down, which is really interesting because it's almost kind of like they're able to say then, we're gonna take a tax write-off when the value goes down, but we're not gonna pay taxes when the value goes up, which is kind of cool because it saves Tesla taxes if that's true. And if that's true, I wanna figure out how I can do that myself. Basically, write off losses when it goes down, but not when it goes up. So we're gonna have to do some more research on that. That's really interesting. I don't know if that's maybe only a corporate accounting method because corporations use the accrual system of accounting in the United States, and usually us as individuals, we use the cash system of accounting. So that's gonna be something to look into. Maybe if there's an accountant watching this, please leave a comment down below so I can pin your comment and let me know if I can do this as an individual as well, because I would love to take juicy losses on Bitcoin without actually taking juicy losses on Bitcoin when there are losses to be had, because right now it's going straight to the moon. They also mentioned that digital assets are subject to volatile market prices, which may be unfavorable at the time we want or need to liquidate them. Now, this really plays into my thesis on Bitcoin. My thesis on Bitcoin has always been that Bitcoin is a volatile asset, but is not a risky asset. And my thesis there has been the longer we have exposure to Bitcoin, the more mass society starts realizing, okay, I guess I have to figure out what Bitcoin is. What is this? And then they learn what the blockchain is, and then they start going, oh, damn, I gotta get me some Bitcoin. Basically, that's what happened to me. And that's why my thesis for Bitcoin, it's been a little controversial, but it's been one that I think is very true, because a lot of people associate volatility with risk, and I think that is a complete mistake. I've said many times on this channel that Bitcoin is volatile, not risky, and that's because the more time goes on, the more I expect people to actually love the blockchain, and the more I expect the blockchain to reiterate how successful it is, kind of like when we had the whole double charge debacle and Bitcoin was selling off, and it was a whole bunch of FUD, a bunch of Fugazi bullcrap, like Bitcoin was actually working as intended. All of that stuff reiterates how amazing the blockchain is. And the more people get familiar with the blockchain, the more people are going to want to invest in what's deemed to be the safest blockchain investment, and that's Bitcoin, because it's number one. You know, unfortunately, Elon Musk didn't throw money into Dogecoin here, which obviously would have been like, oh my gosh, like Dogecoin to $5, you know, that would have been insane. Didn't happen. The money went into Bitcoin because it's well, the number one crypto investment. It's the number one crypto, or I should say blockchain related investment. So this is really, really, really cool. Take a look at what Bitcoin is doing here. So this is Bitcoin in the pre-market here. So the announcement was made around 4:43 a.m. California time, and you had about 13 minutes to buy this before you would have gotten to peak prices where you would have been upside down on it, because now it's around $42,600, but it peaked around $43,850. That's about the peak there. Yeah, 850. Yeah, that's right. So it's down a little bit now, but Tesla's also going up on this news. Tesla's up almost 3% in after hours on this news. This, to me, honestly, this is really incredible. It's going to set up some real implications, though, for how we look at Tesla earnings in the future. We're going to have to look at those impairment charges and kind of account for the fact that Bitcoin losses are getting accounted for, but not Bitcoin gains. So really fascinating. I think this is a huge, huge move. This is going to get a ton of publicity. My first reaction, hell yes. Like, hell yes. This is literally what I expected would happen in my January thesis on Bitcoin, is that more and more people over time are going to get accustomed to Bitcoin, and they're going to say, hey, I don't care if it's volatile, it's not risky. And that's what's happening here. So go Bitcoin, go Elon. This is freaking amazing. I'm so excited. If you're not in Bitcoin yet, it's something that, you know, hey, maybe wait for a little bit of this excitement to wear off, because usually after you get an exciting announcement like this, you get a little bit of a sell-off, but no guarantees. So I'm trickling in. I'm still waiting for another sell-off to maybe add to this. I've got 9 Bitcoin. I'm certainly not going to add right now when there's so much hype that has just pumped up Bitcoin. So I'm going to wait. But wow, this is huge news. I'm jumping up and down inside. Thank you so much for watching. If you found this helpful, consider checking out the amazing programs down below. There's an awesome HODL coupon code you could use right now for February. Take a look at that. And folks, we'll see you in the next video. Thanks. Bye.